over and have the tenant pretty much ask him to raise their rent.
Yeah.
So I have a duplex in Linwood. One side is on Section 8, is massively below market. We're talking about $1,000 a month, $1,050 a month versus maximum 18 on the market. But every time I ask them, so the last 2 years we couldn't ask for the increase because of COVID. But before that, 5-6 years before that, every time I asked for it, they literally either deny it or allow only like $55 per time. Anybody has any better way that I can ask for a rent increase that can go a little bit on par with market? I'm okay with 10-15% below market, but we are almost half.
Did you say this is like Section 8 or something?
Yeah, through Haskell.
I think that's a good question for Dion, like you said, but you might have to like almost make your case to them on why you are requesting a higher rent increase than you're asking, rather than just ask for it. Need to provide evidence of why. Well, my taxes have gone up. My bills have gone up, and try and substantiate it in making your case that way, rather than just send in the thing to ask for it, if that makes sense, right?
Yeah.
You might need backup for that, but does anybody else have any feedback on something like that? It sounds like, is there a policy with Section 8 that it can only go up X amount a year? I'm unaware of it. I don't have any Section 8.
Not in a written policy, but that's all I got so far the last 5-6 years, minus the 2 years of COVID.
Right. How much notice are you giving these people?
90 days.
And what county?
Snohomish.
Snohomish County. 90 days notice in Snohomish County.
They don't even allow you to do it any earlier than that.
Yeah. Have they given you a reason why it's been denied?
Nope. Years past, they basically just said no, they cannot, based on funding and all that.
Oh. Right.
Why don't you just give them a notice to vacate?
Well,
find a cause or no cause, either or.
Yeah, good tenants are pretty hard to find. The tenants are perfect. I mean, literally perfect tenants. But also, it's just the financial side of it. So that's my plan B.
Yeah. Well, I don't know the answer if it sounds like it's a budget restriction. That seems to me,
what are you getting right now, and how many bedrooms are they?
So it's a 2-bedroom. I got 1,050 right now, and market can get maybe 1,800. I mean, it got washer, dryer, private parking.
The HUD fair market value for the Seattle metro area for a 2-bedroom is $1,940 for 2022.
It's probably lower where he's at. I mean, doesn't HUD has maximum rents that can be charged? And whether that has nothing to do with whether it's market rent or not. They have a published maximum rent that can be charged.
So, I mean, that you need to be like, hey, the fair market value for this metro area is X. I'll drop that link here into the chat.
Cool, thank you.
This is where we need to be at, or I'm gonna have to kick out the tenants. You have to just talk to HUD, not the tenants. You got to be like,
oh,
hey,
no. No, I don't talk to the tenant. Just talk to the actual case worker.
Yeah, here are the fair market values. I've got to be at them if they're gonna stay.
Mm-hmm.
Are you in? It's not in King County, is it?
Nope, Snohomish.
Snohomish. You might
and
still
obviously
run into source of income issues.
Yeah. And obviously, every time you talk with them, they think that you're the evil landlord that wants too much money. It's the same thing.
This is what HUD said that they could pay. So It's not you. It's the federal government. They said they should be able to pay this.
Is it based at all upon the tenant's rent? I just Googled, what are the Snohomish County Section 8 rent limits? and something came up and said, on average, each household will pay somewhere between 30 and 40% of its income on rent. But I don't know.
Yeah, that could be part of it too. But this is what the rent is. If the tenants can't afford their 30%, then that could be the other problem, right?
I've
Yeah,
seen it
Chris.
allocate more money for more households too. So if you have a household of 4, you might get more money than 3.
Well, the 4 bedrooms fair market rent in King County is $3,118.
Okay.
So
Yeah.
use that link as your guideline.
Okay, got it.
Yeah.
Cool, good
What
info.
else?
Thank you, guys.
Sure thing. What else you guys got? Anybody else got anything they want to talk about today? Sorry, I missed you guys the last couple of weeks. I've kind of had a shit show here starting off January.
Joe was
doing,
the worst host last week. He was so terrible. We need to have a conversation on his role going forward in this.
Yeah, well,
Thanks,
actually, I
Brenda.
actually want to have a conversation with you guys going forward about all this. Do you guys want to do this once a week? Or should we change it to once a month? Once a week? Okay, you like once a week. Okay. All right.
Well, I like it once a week because I can't make it every week. And if it's once a month, the likelihood of me missing it goes way up.
Right. Gotcha. I wouldn't mind nominating a partner to cover, so I don't have to be here every week, because it's starting to, I'm getting really busy, and I'm would love to talk to maybe you or anybody else that wants to raise their hand on, that's a commitment though. So that's between me and Joe, but we need somebody that wants to talk. So think if that sounds like you, give me a heads up. It's nothing you need to do really. You just show up, right? And be a good conversation starter. So what else has everybody got going on? Anything? Or should I tell you my little topic thing? So I don't know, you guys, many of you, I'll just go at it until you guys say something. I listen to Ken Malcolm. I listen to all kinds of people. It's like my hobby in the morning before I have to get my kids up for school, right? I go get some alone time and check in on the news or whatever's going on, follow my little real estate prop tech stuff and all that jazz. But interesting topic that Ken McElroy put out recently. I don't know if you guys know who he is, but he's a big apartment investor and from this area actually. But he brought up the point that as things are getting crazier in the world, that more cities or counties or municipalities or whatever are starting to enact rent control or forms of it, such as what we have here in Seattle, which now you can't give a rent increase, takes you 6 months, right? 6 months notice. That's maybe some sort of alternative form of rent increase. And so for those of people who are investing out of state or even in state, when you're looking to do a value add project, which is what we all want to buy value add multifamily or rentals and stuff like that. I don't think this would apply to single family rentals, but just more if you get into the 5 or larger, maybe considered multifamily. And it can be different everywhere. There could be different thresholds of, where this applies, how many units, or, do you have to own so many units? And it could be different literally everywhere. So what I wanted to bring up to you guys for something to put on your due diligence checklist, which is extremely important for going forward when you're looking at deals or you're investing with deals with like Jennifer Beadle's out of state or whoever, doing your own deals or whatever you do. You need to do a deep dive on not only like what the current rules are in regards to how to give rent increases, because I think people forget that. They're like, I'm going to add value and I'm going to increase the rent, right? And maybe I'm going to do that over 2 years, right? I've been involved in big projects, where we're doing, 200, 300 units. And, we have a 3-year timeline on those type of stability and lease up after our renovation, where we renovate, we have like an entire mapping system of when we're renovating, buildings, because maybe we're adding washers and dryers to stacks of, you got to do it all at one time, all these things to plan out. depending on the size of the building you buy or when your leases are expiring and all that jazz, you going forward, if you are not, no matter what you're buying, big, small, whatever, probably single family is okay, but I'm talking multifamily. I don't know. You could get really, really effed, screwed, fucked, whatever the word you want to use, if you aren't aware of projecting forward of what's on the dockets of voting in that municipality or county in regards to the discuss. It's kind of like if you buy a condo and you read the minutes of the meeting to see what they've been talking about for the last 6 months. You can find out, oh crap, somebody gave me a Form 17 that says there's no assessments today, but if you look at the minutes of the meeting, Albert and I just were helping one of my buyers with this and ran into this situation. Nobody's lying to us by saying there's no current assessment. This is just an analogy. But if I read the minutes of the meeting and they've been talking about like, what are they going to do about X problem? You've got to, wherever you're buying, whether that's in Tennessee or Texas or Arizona or wherever, we talk about doing this for Airbnbs and understanding the caps on short-term rentals, but you guys need to be aware of this for your multifamily purchases, probably primarily, but who knows, you got to check it all on rent cap restrictions, rental caps, whatever form they might take, right? That could be all of a sudden you have to give 6 months notice or X amount of notice to give rent increases. It could be that you can only increase the rent by a certain percent. You have to plan this on the way in, or you could buy a property, think you're going to renovate it, take your time doing so and not be able to raise the rent to hit could take years. If you have a cap of 3% or 5% or even 10% on your rent increases from your existing rents, right? A lot of times when you're renovating, you might have a turnover of tenants, right? And but I don't know. We should grab Ken McElroy's video and listen to it again because anything can happen on how they formulate whatever form of rent control, rent cap they want to put in place. And it's a big topic with affordability these days. Huge. A lot of states have a ban on, rental restrictions, but you don't want to be buying property that you have to renovate and not be able to get the rents because everyone's like, well, if I just renovate, I can get the rents. Maybe not going forward. And it's a big topic to be putting on that checklist, if you guys get what I'm saying. Anybody following me here? What do you think, Troy? Valid?
Well, I mean, rent controls, it's not a matter of if, but when rent controls come.
And how, right?
Yeah, and how. I mean, it's going to happen, and it's going to happen quickly in some places and slowly in other places. Knowing what, there's always going to be some sort of fidgety thing that you can do, like in New York or California, you can buy them out for $500,000 or whatever. So yeah, it's just part of your due diligence is to know what the current climate in the area is and how things are going. I mean, if housing is a massive problem in that area, it's great for investment, but it's also going to mean that they're going to have housing controls coming in.
Basically read the minutes of the meeting of what's going on, go check that out and see what's on the docket to be discussed, how that works into your timelines. And when you're plugging into groups, even Jennifer Beadle's group, she's awesome. I'm sure this is a topic she's covering or will be covering, kind of one of the, like I said, if Ken McElroy is covering this topic, he's pretty on top of stuff. If you don't know who he is, and he's buying bigger multifamily properties, but you don't have to have a 200 unit property for this to affect you. If you could have a 10 unit. I
think it's a good point to do your research, and you start that by going to the city and checking out the city council meetings. They're going to have, most cities, even Seattle's got some sort of newspaper group that covers the politics. So you want to follow that, but you also want to take a look at the comprehensive 10-year plan for the city. I mean, that's going to show you where the development is, and that's going to show you, what how they're planning to increase housing stock, and that'll give you a good idea if there's going to be a need for rent control.
And there is also, like, I think the state of Oregon passed the statewide rent control. That's just next door to us here, right? We know Seattle's crazy, but I mean, even right now in Seattle, the best buildings to buy, you'd think are going to be, people used to love buying these month-to-month tenant buildings. Well, that's, now all of a sudden, where you thought you were going to renovate the building within 12 to 18 months, you're looking at potentially, you're looking at a long time. You got to understand how to build that into your stabilized budget, right? If you're listening to what brokers or anybody that's selling you property, or even heading a group where you're getting sold property, they're going to say, we're telling you all the information that we have, and we're telling you the truth. And the point is the truth is a snapshot in time. Okay, guys, the truth and accurate information is a snapshot in time. When you're forecasting a value add project, you need to forecast forward, right? Not just, everybody's going to tell you only what the snapshot in time information is, most likely, right? Because they're motivated to get these things sold. So I'd be curious if any of you are plugged into some of these other, groups. Like I said, I'm just using Jennifer as an example because I love her and she's my favorite and she's super rad. And I would bring that up. Like in the, how are they dealing with that? Or is that part of the due diligence? I don't really hear anybody talking about this topic, is what I'm saying. So it's time to put it on your radar, because there's only a handful of people that I actually listen to, because I don't have a lot of time either. So my superpower is vetting good information. That's one of my superpowers. And so, where I'm getting this from is I feel valid. And if they're talking about it, then I figure, well, maybe I should bring it up to you guys. Because I know you guys love to invest out of state. A lot of people do. Anybody have anything to say? It affects our in-state too, right? Affects in-state too. Who knows what's going on in Spokane or Eastern Washington, where you guys might like to invest. You need to, you need to check into these things, is what I'm saying. So there's my preach for this Thursday, January 27th, 2022. What do you guys think? Anybody have anything to say? You're all saying like, we don't buy.
I think you underplayed the single family. And you said it might be, but if you look at the Bay Area and LA, all the rent control goes straight to single family houses too, of a certain age and when it was built. So
well, we got Dante on here. Dante's down in California. Have you ever been affected by any rent control down there, Dante? If you can hear me.
Hey, Julie.
Hey.
Rent control, not personally. I know that there's a lot of rent control in the kind of Venice, Santa Monica area that's really expensive to live in there now. So there's people that are grandfathered into really low rents there. But the value of those properties makes up for that, I guess.
Right. So I think where we're sort of focusing our, if you're buying a property that, is already cash flowing and the rents aren't super duper low, you're probably fine. Or if you have a different appreciation purchase strategy, it's really when you're going to do a value add. You don't want to go buy something that you're going to dump $25,000 a unit into, because your plan was to be able to increase the rents based on your value add. That's how I grew up investing. That was how I made my money. And, just that has changed in regards to the timelines, which then rolls backwards into your loan. Because typically when you're doing a value add project, you might not have your permanent loan in place, right? And so, your term of your loan and how that's structured, right, Albert, would be important to vet out. You might have to do it in stages or something like that in the future, or something, who knows. Just always about that
I'm doing my
love.
rehabbing stages. So I'm in Seattle for some of the properties, and 6 months is that new thing. So I'm also subject to that as well.
Yeah. So are you dealing with a 6 you're having to give out? The best thing to do is try and just, buy somebody out of their lease, right? Cash for keysy type of thing or something like that. Let them out early.
The problem is like if you have to give a 6-month notice and your rent increases are different in the winter than I would raise in the summer, right? Summer is a surge, so your raise would be higher, but you have to time it 6 months behind as a lagging indicator. So in January, I have to plan June's surge of rents. I'm not thinking about January's rents. Like let's say I could only raise 100 now, but in the summer I anticipate 150. I have to shock on all the client or tenant now with the 150 raise because I have to anticipate when it's actually going to go into effect. So it makes planning a lot harder.
What about though, can you give them a rent increase notice that says your rent's going to go up X on June 1st and it's going to go up X on, we're going to renew your rent at whatever your current rent is. And then partway through your lease, your rent's going to go up here, right?
That's what I was thinking about too, because
Yeah.
I was going to do a staggered notice. Like if market does X, then I will do X. If market goes up to this, then I will do this. Because that's the only way to work around it, right? If you're like an entrepreneur trying to work around the laws and stay compliant, of course, and you have to think around it. So,
Well, the other thing you got to think about also is that, for example, in Seattle in particular, and that could be anywhere, so you got to just check for this anywhere, you have to write the notice in a certain way with certain words that end that the notice in Seattle at least expires. You have to tell them it expires on a certain date, because if you tell them it expires on a certain date and they don't respond, then you have a door open for you on the next step that you can take 30 days later. So it's not just about like, hey, Tommy, your rent's going to go up, whatever. You have to understand in each municipality, city, county, whatever, what those rules are for noticing. You guys get what I'm saying? It's not the noticing part is there's some details in there, at least I know in Seattle, which means that it could be elsewhere as well. It's just a lot of planning to, so when, let's say people are like, hey, I've got this apartment building, I'm raising money for, do you want to partner with me? Right? This is how I would vet people. If they don't, they might give me their pro forma and their stabilized budget, right? Where is the lease up budget? Let me see the 12 or 18, 24 months of budget. Let me see that you've done that. I don't want the beginning and the end. I want to see the middle, because if you aren't communicating to me that there's a middle part of a lease up and how the numbers with vacancy and fluctuations and improvements are going to work with the, cash flow of the property or whatever the loan, then you don't know what you're doing. Okay. So for anybody who's investing in syndications or with other people, if they don't show you a lease up budget, considering the fact that the timelines are crazy these days, and there could be a lot of lead time involved, then that should be a red flag for you. Right? Because there isn't like, these are the numbers and this is where we're going to, right? That is, any dodo can tell you that. It's the middle part that nobody's showing you that you need to know about. The time in the middle, how to get there, that budget, that lease up budget. Preaching. That's all I got today. So what else? Should I pick on some people here? Not picking, but anybody have anything aside from this? I'm just coming to you with a topic, so we have something to talk about today. I have this, just whatever I'm thinking about for the week type of thing. That's something that I'm thinking about this week. What else? What else happened? Yeah, my own unit. I have a unit rental in Ballard. The roof had a pipe break and flood down the stack and hit our unit with our tenant in there. And now all the sheetrock on the walls and the ceilings and the flooring has to be or I would say 60% of the sheetrock, and all the flooring has to be ripped out on that, and not our fault. Building homeowners insurance is covering it 100%, but my tenant has to move out essentially, because we have to be able to get to the floors, and we might have to take off the vanity in the bathroom to fix the sheetrock. So she says, oh, I was going to give you notice at the end of April anyway. Right. And I said, oh, that's a bummer. You've been a great tenant. And she said, yeah, I want to, whatever. She gave me whatever reason. And she said, so maybe you can just let me out of my lease since we have to move out anyways. And so I had to say, well, unfortunately, I like you a lot and you're very level-headed and I appreciate you've been a great tenant, but it doesn't work that way. Right. So she is, on the hook for her lease. She's moving out here today. And I was able to work it and make sure she understands that she still has to pay her rent through April. But I committed to, as soon as I get the unit back from the insurance team that are starting tomorrow, that I would release her unit and then terminate her lease when I had a new tenant in place. And hopefully that would only take, 30 days from, she'd only lose double rent for a month. But that's
wouldn't you have had to put her up in a hotel?
Not me. No, not my, well, first, that'd be her renter's insurance, or that would be the building who's taking responsibility. Our homeowners association is taking responsibility because the leak occurred on the roof. Or the pipe burst on the roof. So,
if they've got to move out, does your insurance not cover your loss of?
Great question. I called my insurance company. I said, because it's a rental policy. And I said, do I have interruption of business insurance on this? Because in my apartment world, we've had fires, flood, murders, you name it, and have been able to engage that before, but that doesn't exist on my policy. So I said, my renewal is coming up here in February. Can I add it? And they said, no, we can't offer it, probably because it's a single unit rental in a condo, but I should ask somebody like Elaine Eugenio or somebody like that on that. It's kind of a, it's a pain in the ass for me to do all that. I'm not really, I've had this a long time. It's, kind of just a fluke that it happened, but the tenant, that's the beauty of having good tenants and owning properties that aren't shitholes and in war zones, and is that the tenant's a good tenant. Yeah, sorry, Troy. The tenant is a good tenant and is like, I understand. I've had a good relationship with her. I understand. You've explained it to me well, and I understand I'm going to be paying you double rent. And I said, I appreciate that, because she got a new place. But no, I did ask that question, Troy. And first I said to her, your insurance, that's what it's there for, should cover that for you. Right. And for whatever reason, she said her policy doesn't. And I'm like, well,
does your lease require her to carry insurance?
Yes.
And do you verify it every 6 months?
Yes, but I didn't read her policy. You know what I mean? So there's a little thing, like maybe you need to read people's rental policy. That's a little tip to see what it covers. Because she said it's not going to cover me for this. And I'm like, that makes no sense to me. Right. But anyways.
And so just as an aside to that, sorry, make sure that you're always added as an also insured. So if they do cancel, you get a notification.
Good point.
Their insurance has been canceled.
Excellent point there. Yep. Yes. And what else you guys got?
Julie, on that same topic of leases, we're helping my son buy a house down in Arizona, and we're going to close at the end of February, but he's currently in an apartment complex that's designed for students, right? Mm-hmm. And he has a lease that ends at the end of June. Mm-hmm. And he's paying like $1,000 a month. So I'm trying to figure out what's a good approach to work with the management company to say, to try to get him out of the rest of his lease so he can move into the new house in March and not have to
Well,
pay
because it's a
double
tenant
rent.
building, they might be used to having people terminate early. So you need to just read the lease and there might be a termination clause in there. Lots of, it's random leases. All kinds of leases can have termination clauses built in there, especially if it's professionally managed.
Okay, I'll have to have him send me a copy of the lease then. So I don't know if he even knows where it's at.
And to be honest, student housing, they like to do that so that you either have to make that decision to cash out early and pay them to move. But yeah, that's one of the ways to lock someone into their housing for 2 or 3 years for student housing is to make the lease a different length than everyone else's.
Yeah, and student housing leases could have weird terms and stuff
Yep.
in there because of the cyclical nature of it. But yeah, just read the lease. And if it says nothing, just have him say, hey, what's the process to terminate my lease? Is there a fee? Just kind of act as if and see what they say. Or have him find a replacement roommate. That's the best idea. You know, he's at college, have him find a replacement roommate to slam in there.
Yeah,
And
that
then-
might be kind of hard just for the last 3 months of the semester, but yeah, it's an approach. Yeah.
Yeah, I mean, some kids these days might even stay, you know, at school over the summer, right? Party on, Wayne. What else you guys got? Albert, give us the update on interest rates. If you're there.
Hey guys. You say interest rates?
Yeah, what's the scoop?
Well, we spiked probably upper threes. We're probably idling around 3.6, 3.7, depending on the day. And that's with little to no points, depending on the day and the time. So people have been messaging and are all shocked. Everyone's shocked. I mean, I'm not shocked because I watch it every single morning, but you know, I see it every day. So, because everyone, when we did the pre-approval at 2.8, let's say back in September, you know, they're coming back and they're saying, oh, we're in contract now. Are we still at 2.8? I'm like, no, we're a little bit higher.
Right. That's why I'm telling all my clients on the real estate broker side, we shouldn't be bumping up against your, you know, your max because rates could go up while we're looking, right? Or before we can lock and you don't, you know, you need to have a little room there for sure.
And a 1% raise could deduct your pre-approval like 15%. So if you're at $1 million, you could go down to 850 overnight if the rates go up that fast. So
have they gone up half a point?
Well, from 2.8 in September when I was closing loans till like 3.6 right now.
I thought our mutual clients right now went from 3.3 to like 3.75-ish.
We had a terrible week last week on Tuesday, you know, after Martin Luther King Day.
So we're back.
That Tuesday alone was 0.25%. So that was like 3.3 to like 3.6 right then, that one day. And it didn't improve during Thursday and Friday. And then it got worse this week. So I don't try to, you know, I'm not a bond trader. So I'm not trying to like buy Fannie Mae bonds or anything. But I only look at it when I have people that have critical locks coming up and they have to close. Then I update people.
Speaking of buying stuff, what I've been buying with my financial advisor is bank, like loaning the money bank. Loaning money to the banks, I guess, is what I'll call it. For I've been buying like, you know, $50,000 notes where I'm lending the banks money, and I think the rate that I'm getting just for some asset diversification is maybe 6%. Not bad for having money parked. So not every financial advisor at all has access to this type of thing, but that is a really good play for a little diversification if you have extra cash laying around that I am doing. And then
Julie,
yeah.
Sorry, quick question for you on that. How long is the lockup?
I'll have to check. I don't touch, this is money that I don't ever really need or touch. So I will have to ask him on that. Or if there is, you know, if you can get your money back by cashing out early, maybe you just give up if you needed to, but you give up your funds, your interest or something like that. I'll ask him and come back next week and I'll tell you, or send me a text.
Yes, can I send you a text? Because I was, I'm putting money into iBonds, treasury bonds. They're
Yeah.
paying 7.12 right now, but
Oh,
it's a $10,000 minimum per head.
mhm.
So, but you can invest on behalf of your kids, and the lockup is 12 months, which I think is for the risk-adjusted return, that's a
That
fabulous
is.
thing to do.
Who are you
Yeah.
buying those through? Are you just trading it?
You
doing
have
it-
to buy through, no, they don't sell them through registered advisors. You have to buy those directly from the US government, treasurydirect.gov.
Is there like
But
a, can you send me, when you send me something, can you send me something? I will trade info. And I'll look
Yeah,
into that.
absolutely. Yep.
There you go, guys. Yeah, and so, you know, the other thing I'm doing is, you know, you can take a line of credit out, the cheapest money you could probably get against your own portfolio. If you have like a investment portfolio or a stock portfolio at all, you don't have to cash out I don't know if everybody knows this, it's not like a margin thing. You don't have to cash out your investments, but you can open a line of credit on your own portfolio and borrow money from it at super, super cheap rates, like 3% or something. And while your investments continue to make money, you can use that money. You don't have to cash them out. It's not a margin thing. Just in case you guys diversify at all. And then you can use that money for whatever you want, right? That's the cheapest way to get access. If you have stocks and you set up a line of credit on something like that, that is probably the cheapest money you're going to get. Cheaper than going to Albert or any hard money lender or private lender.
Come on, Julie, come on.
And then get it all stabilized because you guys have done your homework, and then you go to Albert. Actually, you go to Albert from the beginning and make your plan with Albert. So he's ready to take you out.
The Chase bankers, I asked about it, at least at Chase, the big bank, right? I'm sure a small bank would do different. They were saying a minimum funds is $500,000 to get a loan. So.
You mean you have to have $500,000 in your portfolio to do that?
Correct. You need 500,000 of assets, like Tesla or whatever.
Yeah.
IBM. So, and they would lend up to 50% at I think it was prime index plus 0 or minus, depending on your relationship. They would give you a minus whatever factor plus prime. Prime's 3.25 right now. So, you know, if the relationship is really good, they might give you a 0.5% discount on prime. Then your rate would be 2.75.
Yeah.
So as an example,
I don't know what the I'll have to ask my guy what the limit, the threshold is, because what you just said doesn't really affect me, but I will find out.
Yeah, me neither. I don't have any stocks.
Good stuff. Anybody else? What else? What else you got? So Albert, Fed is raising rates. So what's the announcement from yesterday? Was there something yesterday? Fed, what's his name? Jerome Powell or whatever announced what's going to happen in March? Anybody?
He announced the rate raised in March. So Powell spoke. In the morning, it opened well. It was going down. So I told everybody it was going down. And then in the afternoon, it switched really bad. So had to update everyone as well.
Yeah. So what do you guys have any, I want to go back on one subject for a minute. So we were talking about buying properties in other states and watching out for your due diligence on the rent control stuff, right? You guys need to look at your existing properties for that too, right? You need to plan on with your existing properties that you already own. If there's something coming down the pipe that you might need to establish your base now, sooner rather than later, on what your rents are, is what I'm saying. I'll have to find the Ken McElroy video that you guys can grab on that. Let me see if I can tell Joe the name of it real quick. And I'll look for that. But anyways,
Speaking
go ahead.
Speaking of Ken McElroy, I just came back from a real estate conference in LA, and Ken McElroy was the keynote speaker.
Okay.
He mentioned something interesting because I invest in syndicated deals, and I invest in I'm invested in a good number of multifamily deals. So I thought that was interesting. One thing that he mentioned is across his portfolio, and he owns about $2 billion worth of apartment buildings. Across his portfolio, and this is based on his signed contracts, the expense increases for next year are going to be 13%. I have never seen a pro forma that had such a high, and he was cautioning, this was a room full of syndicators, most of them, and money raisers, most of them do multifamily deals. And he said, you know, his crystal ball was saying that, yes, we're going to continue seeing those massive double-digit rent increases for maybe another year, but what's going to start catching up to us is expenses are going to start going up much more substantially than what was written in the pro formas 2 years ago.
Right. Valid.
Mm-hmm.
Yeah. I like listening to Ken McElroy because it's the macro, it's a big, you know, he's, you know, and then you can trickle it down to yourself as a smaller investor on what he's putting out there. But that's a really good, that's a good point. Yeah, I think he even said in this latest thing, his latest YouTube video, he mentioned he was down at that LA conference. So trying to see if I can find it real quick, but I can post it later. What else? Anything else? 12:15. You guys ready to get back to work? Troy, any bites on your mobile home park yet?
We've got a team that's got a 20 unit or 20 park portfolio that's asking questions. They are sniffing around. So I hope they like how my butt smells. So we'll see. Our agent just took to market another park in Flint itself. It's got 10 more homes, and they're listing for 4.5, which is a significant premium over what we've got ours listed for. So it'll be interesting to see if the other deal gets anything under contract. It's a little nicer, but not enough to justify almost two times what we've got. So
well, maybe somebody wants economies of scale, right?
Yeah, I mean, it's mine's an easy value add. Theirs is not as easy of a value add. So
now, weren't you carrying the contract on some of those pads or
yeah,
right?
I got $100,000 worth of contracts.
Nice. What how does that work in the sale?
It's assigned a value at a discount, and we, you know, that's one of the great things about, we can negotiate that, because that changes how the price is paid and how that affects taxes, right? So if they're paying for the land, then they've got property taxes to worry about. But if they're paying for the contracts, then that's a different tax bucket to deal with. And your CPA can screw around with some things on that if they need to be, which is what's great about, I think that's one of the key aspects of mobile home parks, is there's so many different tax buckets that we have that you can allocate funds at purchase and at close in a way that helps everyone out.
Right. If somebody is owns a mobile home on leased land, and that mobile home goes up in value, there is no, well, I guess it doesn't matter because everybody gets an exclusion when they sell stuff as they're primary. I was trying, we were trying to decide the other day. I had a client that I found them an off-market mobile home to buy, 3 of them actually in a park in Bothell. And
Oh yeah, are they still for sale?
they're 55 and older.
I can buy in a 55 or older park.
They're going to be at, you can, are you 55?
Yeah.
Oh my God, look at how young Troy looks, everybody.
Well, I'm not 55,
Oh.
but all my flip deals have been in 55 plus parks.
Oh, these are not, I would not say these are flippable.
That's fine.
They're too nice, or they're nicer, I guess.
If I can buy them cash and sell them on contract.
Yeah, that might be possible. They're in the 225,000, they're not cheapos. They're
Oh, so they are financeable then.
yeah. Well, I mean, my buyer was paying cash because, when you sell homes of older people and they want to cash out and buy something new and they want to stay in the area and they only have $500,000 they're getting out, well, they need 250 of that to hang on to for their living expenses for the rest of their life. It's like being a financial advisor, right? So then I go try and find them mobile homes.
Yep.
But if you're interested, talk to Joanna. Do you know Joanna? My Joanna. Yeah. So to learn more. Yeah, I'm trying to get her to be the mobile home queen, like the go-to for people who want to sell in mobile homes, because we need to place my sellers in mobile homes, try to get ahead of it, have like an inventory of mobile homes to place people in so they can move once when they're older, right? That's the thing there. So, it looks like Joe posted Ken McElroy's YouTube channel. Yeah, it's the one that I'm talking about where he's talking about this is his recent, is from 3 days ago. It's called 5 Urgent Warnings for All Investors. And that's where that's probably a good one to listen to. And kind of where I got this from. So credit to Ken McElroy for that. But okay, guys, I'm going to wrap it up. It's 12:20. Unless anybody has anything else that they need. I'll say hi to Brenda. Brenda, are you there? Hi, Brenda. Do I know Brenda?
Hi. No. Hi. I did have a quick question. If anybody happened to have any recommendations for any good landlord tenant attorneys that possibly have had any success with dealing or getting around all this ERPP and eviction situation right now.
Yeah. Katie Jackson over at Dimension Law Group, although she might have just had a baby. But I'm sure she has teammates over there at Dimension Law Group in Tukwila. Katie Jackson, KJ.
Okay, awesome. Thank you.
Yeah. And also, what is it? LT Services in Tacoma? I don't know. Where's your property?
Mostly Pierce County. I did actually previously do a lot of work with LT Services, but then I had a situation and it was kind of, well, not necessarily their fault, but the laws kept changing and stuff kept coming up. And so I just was wanting to see if there was anybody else out there that might possibly have more.
Yeah. Katie's on top of it. There's also, what's his name? Evan, what is his name? Evan Laughlin, let me look it up. Evan Laughlin.
And is this for single family residences?
I think he could handle that. Yeah.
And the Dimension Law as well?
He's not, no, he's at his Evan Loeffler. He's at his own firm downtown Seattle. Evan Loeffler. Let me see. Loeffler. L-O, yeah. Loeffler. Evan Loeffler. Loeffler Law Group. He is a tiger.
Okay, awesome. Thank you so much.
Quirky guy, but a tiger. And, Katie's very involved with RHA and all that stuff. And we've had her, you might look at our podcast because we've done a couple podcasts on that topic with her in the last however many months. Just go to YouTube and search Seattle Investors Club and you'll see all the podcasts there and it'll be easy to find.
Awesome. Thank you.
No problem. Anybody else before we sign out today? Good to see you guys. Holly, good to see you. Kevin, you want to say anything?
I mean, yeah, if anybody is looking for fix and flips and or buy and holds, we do have some good inventory over at Sundae, and we've got a few East Side deals that are coming up as well.
Ooh.
For all of you East Side peeps, we got some Bellevue, one in Redmond, I believe, and then, well, it's not East Side, but we got one in Lake Forest as well, coming up with views of the lake. So higher end remodels there, and then a few others in Renton, Tacoma, one in Spanaway. So if you guys are looking, let me know and be happy to help you guys out.
Awesome. You know, I have somebody that would be good for maybe the higher end ones, if they're flips in the higher on the east side for you, that I already sent them to you as an introduction. So I will text you, and so you can tap their shoulder when those get listed, okay?
Sounds good. Thank you.
Can you possibly put your contact info in the chat maybe?
Yeah, absolutely.
All right, guys.
Alrighty.
I'm just sending you a text, Kevin.
Ooh la la.
Okay. There you go. All right, guys, over and out. See you next week at Troy's request.
Yeah. I won't be here.
Oh, thanks a lot. Yeah. Well, if
Well, I
anybody's
said every week, so I can be here sometimes.
awesome. Well, no, we appreciate you showing up. All right.